best thing I ever learned from trading. Hi, it's Charlie giving you Saturday's video, and I'm going to be showing you a number of examples in today's video. Um, so, in a nutshell, what is the best thing that I ever learned in trading? Well, it's delayed gratification in a nutshell. But what does that actually mean? Well, another way of describing that is running my winners. And again, that's not exactly rocket science. However, for most traders out there, actually delayed gratification and running their winners for into for a larger run is very difficult. So what I come across time and time again is traders wanting to be in and out of the markets. So they feel like they're really busy, and by doing that sort of thing. But actually, I'm going to go through a number of things in this video here today. I mean, obviously this is from my perspective, but I'm going to go through a number of examples explaining my perspective of the whole being in, being out and being busy versus these delayed gratification as far as trades are concerned, and looking to run your winners and the way that I go about doing that. So this starts off with a story, and it focuses around, it was probably around about 2006. I was having a conversation with a broker at the time, a bespoke broker who wanted me to go and trade with them, and they dealt with small money managers and high net worths and stuff. And I remember having a conversation one time, and he was talking to me about the best traders that he's ever come across in his experience, being on the other side of the fence. And he said the best traders, and this is, again, it's not rocket science, but he says they get into a winning position and they squeeze it for all they can. So they try and hold on for all they can, and they will then add into those profitable positions as well. So for many people, this still isn't rocket science, but a lot of people don't actually do this. Now, anyway, that was back in 2006. Did I actually do anything with that information back then? No, I did not. It went in one ear and one out at the other ear. I was busy being an intraday trader and a vanilla, as I call them, a vanilla swing trader. So what does that mean? A vanilla swing trader is just taking vanilla trades. So a standard, take a trade, get in here, maybe have one or two targets. So I've got target price 1 up here, maybe a target 2 somewhere further up, and that was it. Get in and then bank half profits and then bank the other half profits or whatever. So vanilla trading, I call that. So it wasn't until around about 2013, so several years later, way after the end of the financial crisis, that I was having some nice swing trades, still very much intraday trading at that stage. And yet I was having some really nice swing trades, and then thinking, I wonder what can I do to do more with these swing trades? And that conversation resonated with me, and so I started to look into this whole getting into a trade, but rather than wanting to look for places where I can then get out and start banking profits, taking myself outside of my comfort zone. So your comfort zone, I'll call it CZ here, your comfort zone is, right, get into a trade, bank half, move your stop up, right, risk-free trade on the rest. That's your comfort zone, all right? So I wanted to come outside of my comfort zone. And so how can I do that? Well, basically, not bank the profits, hold on for longer, and add. So there's nothing worse than being in a lovely open profit. So you've got in a trade down here and the price has been going up. And whereas a lot of people would be banking some, let's say, hypothetically over here, instead of banking at this point, and you moved your stop loss up, and you're now in a comfortable trade, so to speak, actually making myself uncomfortable. I might still have moved my stop up, but I'm moving my stop up and then I'm putting fresh risk back on. So another new position on at that sort of stage. So you're never in that comfort zone. So I wanted to trade how the masses don't want to trade. And so that was around that 2013 sort of time. And it was interesting, really, because by the time we got into 2014, when I first started the first trading challenge, which was originally the 10K to 100K challenge that I did. Some of you will remember that. So when I did that challenge, although I was intraday trading it, that during that challenge, when I reviewed at the end of that, it took me 2 years, 8 months to do that. When I reviewed it at the end of all of that, where was the bulk of all of this, the gain? The bulk was in the swing trades. Okay, so the bulk of it was in those swing trades where I was, getting into trades, adding to them, etc., etc. No real surprise to me, but I still thought the mix between the intraday and the swing trade, trading, it was heavily skewed. Don't get me wrong, the the intraday trading obviously still contributed to the total gains, but a lion's share, I don't know what it was now, 70-80%, let's say, of the gains were from the swings. The nice thing with the intraday is it gave me, when the swing trading was going through a drawdown, I was probably making money on the intraday sort of thing. But overall, because intraday positions will be smaller generally than swing trades, the bulk of it was on the swing trading side of things. So then, again, as you evolve, as I evolved as a trader, as the years went by, I'm seeing time and time again that these big swings, when they come in, can make your, they can make your year's profit in 1 or 2 swing trades in a whole year. Yeah, you've still got to be in other positions because you don't know which of the swing trades are going to be the ones that do make you that big return. But following that same process of, analysis, getting into a trade, if it starts running, adding to the trade, and all of that, and you only actually need 1 or 2 of those in a year, there's going to be lots of attempts at those which end up just rolling back over and amounting to nothing, having a bit of a drawdown when they just stop you out. But when the big ones come, they more than make up for all of that. I understand that for a lot of traders, that's not easy, and that's why I call it the road less traveled. The road less traveled. Because really, where do I want to be as a trader? Mostly where the masses don't want to tread. So I want to be in that road less traveled, which is getting into a swing trade and then adding to it as it progresses. Adding. And those are the ones that become the mega trades. In fact, one of our members has just closed out recently on gold a 35R trade on this run here, using that exact 35R, using that exact get my pen working, style of trading that I do. We've got other traders who have turned 5K into 50K. All right, that was slightly different what he was up to with that. But this type of trading, when you're going for these mega returns, we've had another trader who did a 91R trade just 18 months ago. 91R, that would make your year. Do you see what I mean? So anyway, and so for me on a personal level, that's how it evolved. And then over the years, I trade the euro dollar a lot, but when I look back and review, again, even to this day, where do I make the gains? All right, now I only swing trade. I don't need to feel good to have those shorter term trades happening all of the time. It's absolutely fine to do that. And for a lot of traders, they'd rather do that. They'd rather have some shorter term, I don't mean intraday, but short term swing trades, which just keep them ticking over, keep the scoreboard ticking over, and then they, and then are looking for those big trades, as well. But the nature of what I do, from a time perspective, it's better for me to look for those more individual trades and put my time and energy into those than to be too busy, is what I mean. So I'm always in trades, but I'm not in lots of vanilla trades all of the time. But plenty of our members do that. But anyway, so for me, that's what suits what I do. So again, going back over the years, when I look back, it's actually, a few key trades that make the bulk of my gains. Yes, I will still have vanilla trades during the course of the year. I will still have some trades that just hit a level, and I don't have much of a long-term view on them, and I just bank the profits. Of course, that does happen. But where does the bulk of the money come? It's on those big runs when I get them. That's a good example. Actually, down here, into the end of into 2023, into the early stage of last year, and time again, it's these big runs. When the markets have those runs, that's when the money's made. When the market goes sideways, I'll be losing or I'll be flat. That's just the way it goes. But I know that the market doesn't go sideways forever, whatever the market is you're trading. So. And if I go back now, I'm trying to work my way back because there were a couple of pivotal trades for me. The first one was back, actually, it was on the S&P, but I've got the euro up now, was back in 2013 or 14. It was my first ever 100K trade. And that really cemented that story, what I'd been told all those years before, and then working on when I have a bigger potential target on a trade. Not every trade has got a massive target. Then seeing the potential to be able to add to the position and add to it maybe more than once. And so that was my first evidence, so to speak, of being in a Dow trade and building the position, and then it getting to the target, and it was over 100K as an individual trade for me, and then it just built over the years. I remember trading Aussie dollar in 2015 quite a bit. Not every trade is a 100K trade by any stretch of the imagination, but certainly following that philosophy of identifying trade chart patterns and sentiment and the fundamentals, but putting it all together and then identifying when there is the potential to run a trade for a bit longer. And a classic example is the euro back in 2017. So I'd been trading the Aussie a bit, funny enough, in 2016, and the euro on the short side in the back end of 2016 as well. But by the time we got into 2017, there were lots of reasons why I wanted to be on the long side here of the euro. So I ended up catching a really nice run. Now, I was holding a call position and then trading in and out around that call position. But this was another mega trade, as I call them, where I had this mega run and financially, makes, some really good gains. And as the years go by, whether it's on the euro or it's on a stock index or another currency, I do, although the euro is my predominant currency I like to trade, there are other currencies that I trade. I do trade the dollar yen at times and other currencies. But it's the philosophy, and it's coupling up the techniques that I like to use along with multiple time frames, and having the thick skin to be able to take trades and add into them and all of that sort of stuff. And that takes time. You can't just say, oh, I'm going to do that, because it's something which you have to build experience in to do. And so that's why I do it all of the time. It's good for our members when I'm doing it and showing them, as I'm taking my trades, of course, they're seeing what I'm doing. And it's a choice. It's not something you have to do. All I'm talking about is from personal experience. Where have I made the bulk of my gains since 2013? The bulk have come from these mega swings. Yes, I've made gains elsewhere, of course. There's bread and butter type trades as well. But the old 80-20 rule is that 80%, probably, maybe even more, I don't know, but 80% of the profits come from 20% of the trades. It's that old life rule, really. And so what's the point of this video? The point is that if you can look at your trading, and you don't have to do what I do, where I'm looking for those, 10, 20, 30, 40 R return trades at times when they come in, and sometimes more than that. But even if you are merrily going along, banking profits at 1-to-1 or 1.5-to-1 or 1-to-2, if it makes you at least have a look at it and have a look at what you're doing with your trading, and make you look and see if you can run your winners for more. Very often you don't need to do more, you just do more with the trades you have. And on that note, I shall leave you to your weekend. Some food for thought there this week, and have a lovely weekend. I'll be back in touch next week.